President Trump's bear trap as it played out. S&P 500 and NASDAQ re-entered the new bull market today. Gold may have topped as the dollar shows sign of support, and we'll look at Bitcoin as it continues its upward trajectory, possibly going to the moon. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 2nd, 2025. As always, please help me promote this channel by sharing, liking, and making a comment on this video. If you're a subscriber, stay tuned. We'll be covering various securities, for example, market breadths, natural gas, crude oil, various ETFs, foreign ETFs, large cap stocks, as well as speculative securities will be covered there. If you are not yet a subscriber, consider signing up by going to MasterChartsTrading.com or following the link in the description. Throughout the presentation, I'll be using my proprietary MasterCharts Trading price action indicators. You can see them on this chart, this green, blue, red, and yellow lines. So I think basically what this whole freak out, I can only call it that, that began in the beginning of April and lasted a few weeks. This whole entire thing was basically a bear trap. So a bear trap occurs when, well, obviously, bears get trapped. So we saw extremely negative sentiment readings. In fact, I'll show it to you on the chart of the advanced decline issues. So this is advanced decline issues. So it's advancing issues, how many stocks moved higher. We subtract from that how many stocks moved lower, and we take a 10-day exponential moving average, 10-day moving average of that number. And notice that in the beginning of April, this number dropped to negative 900. So this is extremely oversold levels, and this was one of my clues when I was like, this is just way too oversold. And even though it was given as a short signal, there's a short signal where I'm hovering on 10th of April, occurred on 10th of April. Another one occurred right there on 16th of April. I was extremely reluctant to sell it short, to sell stocks short, just for precisely those reasons, is because it is just very unlikely that stocks will continue lower at such deeply oversold levels for the market breadth. In other words, how many stocks are advancing, how many stocks are declining? Yes, a ton of stocks were declining, but it was just way too deep, too steep, too fast. And then additionally, on the 9th of April, we had already explained this multiple occasions. I mean, there is only one way to call this candlestick, that occurred on 9th of April. This candlestick was so big and so long and so green that it overshadowed pretty much anything that we've seen in the past years. I've not seen anything of this nature for the S&P 500. I don't see anything that large in one day. And as a saying goes, size matters. And in this case, size definitely mattered. This candlestick was enormous. It was big and green, meaning that this was just not the place to sell short. This is just not the right time. And clearly the bulls were just waiting to pounce, and they were absolutely successful. Yes, we got a big back and forth, but I guess this pullback into 21st of April was a buying opportunity if you like to pick bottoms. Here at my service at Master Charts Trading, we don't normally pick bottoms unless there's some sort of a special case, which I'll show you with gold, which might be unfolding as we speak. But we normally wait for a breakout, and so we have that today. We have a breakout above this blue support resistance line. You can find out more about the lines by going in the description. But what this means is that we now have a definitive signal to say that we're no longer in any kind of downtrend or bear market, and we're definitely out of this bear trap. So we definitely did not fall prey to this bear trap, and now we're in a new bull market and we want to be buying. So, right this instant, again, I'm going to refer to market breadth for this. So right this instant we're looking at, I normally cover the market breadth in the members only section, but I will show you this particular chart because I think it's so important. So currently the reading is in very overbought area. So we're currently at 740 or so. Remember that in April, beginning of April, we were at negative 900. So we came, this is called a V-shaped reversal, so V-shaped. So we definitely came a very long way in a very short period of time. And so this move, occurred in like 3 weeks, basically, 4 weeks at most. So we're now in very overbought territory, and this is the reason why I am somewhat reluctant to buy immediately, and I think we might get a shallow pullback. So looking at the 4-hour chart, we kind of can see where that pullback, should it even occur, might unfold. So looking at this chart, here is the bottom in April. So 4-hour chart just means that each candlestick is 4 hours worth of activity. You can change that here. If you're using my indicators, make sure you keep the settings at 250. If you go to weekly, go to 52. Now, okay, so 4-hour chart. So this is what I was referring to. Here is the 21st of April, and then on 22nd of April, we gapped up. So there's this small unfilled gap that still remains, and this gap is currently around 7% away from today's price levels. We can see it on the daily chart. It's right there. It's April 22nd to April 23rd gap where I'm hovering. And so I think unless we just, skyrocket forward, make new records, which may happen, of course, but, everything is possible. But, we've been moving higher for several weeks now. So I think if we get a pullback, something of this nature, and then maybe we'll bottom out around this red support resistance line, which is currently at 5,300, and maybe we'll continue higher from there. But even without that happening, I think we could easily just pop higher and continue towards new records. In other words, bull market implies new highs are very, well, to be expected. Not even very likely. They're just to be expected. Bull market means higher highs, higher lows, new all-time highs and all that. So at this point we're looking at, either small consolidation or not even a consolidation and a move higher. The only concerns, like I just said, is that we have market breadth is quite overbought, and the there is a gap remains in a 4-hour chart that could be filled. It may not be filled immediately, and they say that all gaps are filled. We just don't know at what point, and we could get this gap filled, but what if it gets filled in 5 years? That's also a possibility. So for now, I am moderately to pretty optimistic about stock market. I am moderately optimistic about the fate of the world, about Ukraine war. I am kind of concerned about things going on in Pakistan and India, but I think they will not start a nuclear war over Kashmir. I mean, anything is possible again, but hopefully cool heads will prevail. For now, this looks pretty good. Somehow this whole tariff thing was either priced in or just, not as big of a deal as we thought it's going to be. Okay, let's look now at S&P 500, or rather at high yield bonds. So another reason, okay, first of all, this is ticker JNK, high yield bonds, and down below here it says ADJ, it means adjusted. I can uncheck that, and the chart looks completely different. So again, with junk debt, high yield bonds, I usually include the dividends or coupon yield into the price of the security. So in this case, high yield bonds, notice that they never went, towards the bear market. The bear market was at the yellow line, and we kind of stopped around the blue line actually. So the credit markets did not really think that this entire tariff freakout was even warranted. So that was another big reason for me not to consider selling short. High yield bonds are now approaching records. So when high yield bonds are leading stocks higher, I feel warm and fuzzy inside. I think this is a good thing, and we will again keep an eye on this, but for now it looks pretty good to me. All right, let's switch gears. We're currently looking at the dollar currency index. So dollar, a lot of fluctuations, obviously. It was in an uptrend until relatively recently. So we had a big move up from September into January, a pullback. And then right there where I'm hovering on the 7th of March, we had an entry into a bear market. And we had actually an opportunity to sell short, a few weeks. And then on the 2nd of April, that was the last time I think I would be willing to sell it short. We had a very nice move, so if you did catch it, congratulations. Right this instant, I am looking at this and I'm like, are we bottoming? It's a possibility, I'm like fairly certain that we have at least began the bottoming process for the dollar. So once again, this entire tariff thing is definitely not pretty, and it's not nice, but it is what it is, and we were dealing with it basically. So the bottom here, it's a possible the dollar has bottomed. I know that some people think that lower prices for the dollar is beneficial to U.S. economy. It just depends how you look at it. What's more important? Are you looking at higher inflation? If dollar is appreciating, then inflation is less of a concern. If dollar is depreciating, inflation is of bigger concern. And we're looking currently at gold. Gold is theoretically a gauge of the inflation. We have traded gold very successfuless. So notice this upward facing arrows right around the blue line. Again, that's the only thing we really need to know. So last opportunity to buy was sometime in February of 2024. Then gold rallied from about 2,000 to 3,400 or so that we're at now. But then I'm seeing this, I saw this candlestick here, which looks like a shooting star on the 22nd of April. And then we had a continuous pullback. We're currently below the green line. So I think this pullback might continue. Definitely gold has been way overextended. I think a pullback towards the blue line at the very least, about 6%, is quite likely. What happens there, it's a very good question, and also that would imply, if we did pull back towards the blue line, we can also almost, almost guarantee that dollar also will be moving higher as a result. So if gold pulls back, towards this blue support resistance line, which is around 3,000 or so it's about 6% down, by extension dollar will likely move higher, and that implies that euro versus US dollar, British pound versus US dollar, US dollars versus Swiss franc, etc., Japanese yen will weaken versus the dollar will strengthen as a result. So next few weeks, I would say into mid to end of May, those would be the patterns. So dollar would be bouncing back, while gold most likely will be pulling back down towards the blue support resistance line. So very important to see what happens to gold when it hits about 3,000. So 3,000 is sort of a very important number. If it kind of holds there and bottoms, and where's something like this, for example. So this was previous all-time high in December of 2023. And then we got a pullback towards the blue line, and then we bottomed, and then we continued higher. So this would be a sort of similar, or possibly something of this nature. So this was very sharp acceleration higher, and now we're seeing a pullback. If it doesn't hold, if gold doesn't hold around 3,000, it could continue lower, and if it does not hold at 2,700, it means gold would be in the new bear market. Have we ever had bear markets for gold? Of course. Here's one that began in 2022. Yeah, it went from 1,800 to about 1,600. It was a short-lived bear market, but it was definitely a bear market. There was other bear markets, for example, right there in June 2021. So yes, gold could depreciate no matter what gold bugs tell you. Finally, let's move on to the modern age of cryptocurrencies, and this is Bitcoin. Currency we'll love to hate, but I decided to love it for now, and I actually bought I bought Bitcoin at around 91,000 even on 22nd of April. And the way I trade is, again, I'm using my lines. So why did I buy it there? It's because it broke out above the blue line, so that's all I really needed to know. At that point, I bought around 91,000. I set my stop at the red line, so you can see this is what I did. This is my stop at the red line. My target was about, okay, so I'm gonna put this is a new indicator here, ATR, average true range. So it's basically the number of how much on average does this particular security move on this particular time frame. 1 day daily chart, and in this case Bitcoin moves around $2,800 per day on average. I'm reading off the chart right there. That's because it's so expensive. It's like 97,000 right now. So I only need 2 times that, so I needed about $4,000 move, and it did move about, actually more than that, it moved $6,000. So at this point I moved my stop to entry, and I'm sitting basically at no loss. Let's see what happens. I mean, I think Bitcoin, if it breaks out above previous records, it could just continue. We could look at let me look at the weekly chart of Bitcoin and see where we're going with that. So there's Bitcoin on weekly chart. So a breakout above previous highs. Let's see, we can estimate something of this nature. So possibly another, at the like that maybe. So about $33,000 higher when or if it breaks out above previous records. The reason is because this is the depth of this latest pattern, sort of like a cup. And I think the depth of this pattern could be replicated on the upside. So Bitcoin to at least 140,000, but actually the sky is the limit as far as this particular security. So sky is the limit for any security, but this is a reasonable estimate. So for if or when we break above new records, I think we can expect a significant move higher still. Alright, and that's it for this week's recap. If you are ready to sign up, stay tuned and I'll tell you how to find me on the internet. Other than that, thank you for watching and have another great trading week. Bye-bye. So to find me on the internet, please go to MasterChartsTrading.com, click on sign up for one of the products. So again, I have two products and one bundle. Trading indicators are these lines on the chart, this green, blue, red and yellow lines. And again, you can trade pretty much anything under the sun on pretty much any time frame. These are available for TradingView.com. This is a TradingView.com interface. It is a free interface, so all you have to do is buy or get a free TradingView account, then come back to my site, to MasterChartsTrading.com, and sign up for the indicators. I will open the door for you on TradingView.com. I know it sounds convoluted, but that's just how it is. Newsletters, so again, I send out daily alerts about various securities such as market price, natural gas, various ETFs, foreign ETFs, large cap stocks, as well as speculative securities. I send it out daily, and we also get a weekly members only video that I send out on Fridays. And of course, the best deal is to get both trading indicators and newsletters. And of course, the best deal is to sign up for a year. It is a $49.95 per month equivalent, as opposed to a yearly subscription of a monthly subscription of $59.95 per month. As with all of my trials, as with all of my bundles and products, I have free 7-day trial, so you don't have to worry about if you don't like the service, you can always have 7 days to cancel and get your full refund, of course. That's it for this week's recap again. Thank you for watching. Have another great trading week. Bye-bye.